The numbers should be coming out momentarily. Steve, here we go. All right, 243,000 on initial jobless claims. Definitely better than expected, about 10,000 better than expected, at least till we see a revision. It's 7,000 less than 250,000 in the rearview mirror. 243,000 would be the best level since the week of July 22nd. Now, on continuing claims, 1,415,000, also better than expected. And sequentially, it's what, 22,000 below last week's until we see a revision. So 1,415,000 is the best level actually going back to mid-July, the July 15th week, and that was under 1.4 million. Now let's get to GDP. Our second look at second quarter takes away it gives back a tenth. Down 0.6 instead of 0.7, so that's a tenth less with regard to the negative aspects of the contraction with regard to that quarter. And it follows, of course, minus 0.9 in the previous quarter. Now, the consumption number ramped up. This is really unusual. The economists had it right. It ramped up from 1% to 1.5. That's a nice jump. Now, the price index going the wrong way. Here's the number that you're going to talk about, Steve. 8.9% on the price index, 8.9%. Now, that is a new high water mark. 8.7 from June was the old high water mark. That is the highest level since 1981. Well, and it could be for a while because 1981 goes all the way up to 11%. Now, if we look at the quarter-over-quarter personal consumption expenditure core, also a favorite of the Fed, it remained at 4.4%. And 4.4%, of course, is well below the high water mark, which was 6.1, and that was in June, the second quarter of last year. So the big news is the price index jumped up and claims are well behaved. And another issue to be brought up at the symposium, the continuing claims being so well behaved, even though initial claims finally are coming back down again, gives some people confidence that the initial claims are short-lived, and that's brought through by how continuing claims have been more well-behaved, probably because there's so many more job openings than people to fill them. Joe, back to you.
All right. Thanks, Rick. Steve?
Yeah, a lot to unpack here, Joe. Let me just start off with what's happening with jobs. It's a process that I kind of expected to happen. I talked about it. The Journal wrote a story about it. With the tight labor market the way it is, we do hear a lot of headlines about companies laying off workers. What I think is happening is you have this process where people are laid off, they spend a little bit of time in jobless claims, and then they get rehired. It seems to be a very good market, I hate to say this, in which to lose your job because it seems to be relatively easy to find one. I think that's the process that's keeping a lid on what is an elevated claims rate from what it was, but certainly is not alarming at this moment. And it keeps along with that theme that while other things may be weakening in the economy, the job market remains tight and it remains strong, and in a sense, a problem for the Federal Reserve. On the GDP number, it gets back to that debate about is this or is this not a recession? Again, the upward revision, 0.3 of a percentage point upward revision in GDP overall, still negative, but that consumption number, which Rick said was revised higher, it's hard to be saying we're in a recession, Joe, when you have the consumption numbers the way they've been running. It's one of the indicators that the NBER will use to determine whether it's a recession. I think the market may have taken its eye off the ball because I think the concern is a recession down the road. Esther George talked about there's a lot of tightening in the system that may not have taken effect yet. And then Rick talking about the bond market saying, you know what, maybe better growth lies ahead. We had Bullard on a couple weeks ago. We'll have him on later today, who said, you know what, the second half is going to have better growth. It'll be positive numbers. So a lot to think about, a lot to chew on. And I forgot to mention Andy and Tom as part of our crew here out in Jackson Hole. That was just an oversight. They're just as vital as the rest of the A team that they are indeed part of.
Oh, yeah.
Shepard Smith here. Thanks for watching CNBC on YouTube.